We're back with a breaking news report on Rick Perry's flat tax proposal, which he's just released through an op-ed piece in the Wall Street Journal. Among the highlights, a choice between your current tax rate or a flat tax rate of 20%, a reduction in the corporate rate to 20%, and an opt-out of Social Security for younger workers. Joining me now by phone is MSNBC analyst Jared Bernstein, former chief economist of Vice President Biden. Thanks for joining me tonight, Jared.
My pleasure. Thanks for inviting me.
Jared, I'm speed reading through this op-ed piece here in the Journal, and what I'm seeing is you would have a choice between a new flat tax rate of 20% or your current income tax rate. The new flat tax preserves mortgage interest, charitable deductions, state and local tax exemptions for families earning less than $500,000 annually, and it increases the standard deduction. Now, that is different from Herman Cain's plan in that it allows deductions beyond just charitable. The mortgage deduction, a very important deduction for most people who take it, is preserved. But it looks like if you give people an option of paying their current rate or paying 20%, it's very clear that only the highest income taxpayers will take that option of paying 20%.
Right. I mean, what you've done here, it's interesting. He kind of swaps out Herman Cain's three numbers for three syllables. He calls his plan cut, balance, and grow. In fact, it's a very complicated idea. What you've done here now is create a parallel tax system. Everybody who can afford to do so is going to figure out their taxes twice and pay the lower rate. Now, a very important difference in the current system and what the candidate Perry is offering here is eliminating taxes on dividends and on capital gains that you hold for a while, long-term capital gains. That means he's going to land us right back in the same place that candidate Cain did. If you're going to be revenue neutral here, and he doesn't explicitly say that, but I think we're safe to assume that he's talking about a revenue neutral plan, that means somebody's going to pay less and somebody's going to pay more. Once you start exempting wealth like that, you're shifting the burden onto middle and lower income households.
And Jared, he's allowing younger workers, I'm not sure what the age definition is of younger workers, to opt out of Social Security, which is the surest way you could possibly come up with of eventually abolishing Social Security.
No question about it, Lawrence. He also eliminates taxes on Social Security benefits some folks currently pay. We can debate the efficacy of those ideas, but in both cases, what those do is undermine the financing to the system further. You hear Republicans talk a lot about how we have to shore up Social Security in case like this. What he's really talking about is a backdoor way to privatization. If young workers can opt out of the system, that absolutely, unquestionably, fully undermines this intergenerational contract known as Social Security.
You know, this is one of the reasons why I've stayed on Herman Cain's 999 plan, is because it is a flat tax plan with a sales tax thrown in, and these flat tax plans all behave the same way. They are hugely beneficial to the rich, hugely beneficial to the high income earners, and extremely harmful below that. There's a big job killer provision in here, Jared, that I've found, which is the way he treats what they call the repatriation of foreign profits. He wants to drop that taxation down to something extremely minimal, which is a way of encouraging companies to earn more profit overseas, which means they will move more jobs overseas in order to earn that profit overseas.
This is a neatly wrapped up package with a ribbon on it for multinational firms, basically taking the incentives to already go across borders and create investment and jobs there as opposed to here, and putting it on steroids. Not only does he reduce the corporate rate to 20%, so that's a very large reduction, but he has a temporary reduction for this tax repatriation idea that takes it down to 5%. Now, we've tried this before in 2004, and what we found is that multinationals who had been deferring their earnings, holding them overseas as they're able to do, instead of bringing them back at the statutory rate, they bring them back at this low rate, and in fact, they didn't create investment in jobs. They paid out dividends, and they increased their share prices. So once again, I mean, the thing by the way, then he switches to something called a territorial system, which I won't go into right now, but is worth exploring further at some point. Let it be said that Each one of those ideas, the big cut in the corporate rate, the repatriation and the moving to territorial, are all big incentives for multinational corporations to do much more investment and job creation overseas than they do here.
If President Obama is lucky, Mitt Romney will be forced to embrace some form of flat tax, which I think, combined with the Republican Party's history on the Ryan Plan votes on Medicare, would be an absolutely lethal package for a Republican nominee to try to carry into a general election against the president.
Look, I think the president is going to be very clear on the shortcomings that we've discussed so far. Basically, what this plan does is pretty much put you back on the sort of trickle-down tax cuts at the very top, the basic roadmap that got us to where we are today. And I don't think it's going to resonate with most people when they get a closer look.
Jared Bernstein, thanks for joining me tonight on this breaking news tax story.
My pleasure, Lauren.
Rick Perry is not just an advocate of a flat tax. He's also a champion of socialism, Republican socialism. That's in tonight's Rewrite. And later, we'll have a last word exclusive with Apple's other Steve Wozniak. He'll join me.